Assalamualaikum and very good morning. So today we shall continue with the next topic, still under topic 3, which is on audit sampling. Okay, our learning objective would be for the students to understand what is actually audit sampling and the types as well as the classification of sampling. Now, remember in our first class, we have talked about, as auditors, we are very concerned with our audit evidence, and this is covered under International Accounting Standard 500, where it says here that the auditor should obtain sufficient appropriate audit evidence to be able to draw reasonable conclusions on which to base the audit opinion. And it is quite impossible for us to actually look at all the items or all the transactions in the client's organization. So one way to actually get our audit evidence is through sampling. And for that reason, we need to understand what kind of sampling that we need to do. Okay, before we go further, it is good if we can understand what does sampling mean. Sampling in a simple term refers to the process of getting evidence to a certain amount that can reflect the population. Populations means the whole transactions. Okay, if we look at the Auditing Standard 530, sampling means the application of audit procedures to less than 100% of items within the account balances or class of transactions such that all sampling units have an equal chance of selection. Meaning to say, in performing our sampling process, the item that we have selected could be randomly taken, and for that reason we said that each of the item has an equal chance of selection. If we later on, towards the end of the semester, we will learn about audit report. And the auditor's function is basically to express the opinion in the auditor's report, and we are doing so based on test basis. We have to emphasize the importance of that particular word in the report, because we know that in performing our duty, we only perform on the sample basis. It is impossible for us to check 100%, and it's not economical as well. And the audit sampling can either be statistical or non-statistical. For this video, I'm just going to discuss on the statistical approach. The non-statistical approach will be discussed in the next video. Okay, audit sampling itself varies among firms. A much larger firms perhaps use a lot of computerized information system, and for that reason, the way or the approach that we are going to take the sample will be different. But for small firm, most of the time we will perform non-statistical sampling. Okay, there could be cases where on high value items, 100% test on individual items will be selected. This is due to the nature of the item itself being high value and suspected to be error, such as overdue account receivables, or maybe in a company or organization where the transactions volume is very low, but the value of the items is very high. Okay, I give you one example where we might have one company which sells luxury cars, and they can sell about maybe less than 10 in 1 month. So in 1 year, times with 12 months, 120 transactions is not that difficult for us to actually check. In comparison to a multinational company or hypermarket which sells thousands of items per day, so it is impossible for us to actually vouch all the payment voucher or all the receipts or the copies of the invoices. So for that reason, sampling makes our is economical and makes our auditing process much easier actually. Okay, this is the definitions of sampling risk. So basically, there is a risk that the sample that we have taken may not be representative of the population. Okay, I will not read this. You can read this by yourself. But basically, if we want to increase we want to lower the sampling risk, we have to increase the sampling size, because the more sample we take, there's a high chances that can represent the population. Okay, sampling risk, there are two types. First, in relation to the test of control, the first type of risk is the risk of us assessing the control risk to be too high. That means we assess the control risk of our client's company to be higher than it actually is. Or it could be the second type, which is the other way around, where we conclude the control risk to be too low. While in the substantive test of monetary error, the first type of risk is that the risk that the auditor will conclude that there is a material error when in fact it does not exist. So we are saying that there is a material misstatement, but actually there is no error or misstatement. While the second type is the risk that the auditor will conclude that a material error does not exist, but it actually exists. Of course, as auditor, we do not want to conclude or to be classified as either of the risks, and for that reason, we have to take certain measures, plan well, so that we will not miss certain things. Okay, non-sampling risk is something else. Basically, it refers to factors that cause the auditors to reach a conclusion other than the sampling size. For example, we rely on another representation on erroneous information. That means we do not use the right audit procedures to reach to certain audit conclusion. Other example would be misinterpretation of evidence, human mistakes such as failing to recognize errors in documents and applying auditing procedures that are not appropriate to the audit objectives. Types of sampling itself, there are two types of sampling. Okay, as I mentioned just now, statistical and non-statistical. Okay, let us look at statistical sampling. Basically, it means approach to sampling that has the following characteristics. We will select the sample randomly. We can rely on some smaller size. We use probability theory, and such method can be used as a defense measure in the court. While the non-statistical sampling or non-probabilistic or judgmental sampling basically based on the auditor's professional judgment, based on their experience in selecting the sample. So because we rely on professional judgment, it may not be that defensible when we use that in a court. But then again, in the court, they will actually require another person to testify on why they are choosing certain sample to prove that another auditor will do the same thing to come to the conclusion. The three types of statistical sampling, we have attribute, monetary, and classical variable sampling. Attribute sampling, as the name says itself, actually refers to certain characteristics of the sampling unit that we are going to take. So we will base on that certain attribute. For example, here we want to see how often a credit check is not performed. Okay, so we are looking at certain characteristic of certain item. while in monetary unit sampling, we are looking at the amount of the item. Okay, let's say here, if we're looking at the auditing account receivable, so we set the maturity level at 5,000, so we are going to take only sample which is amounting to more than 5,000. The last one is classical variable sampling. This is using the normal distribution theory. It's just saying that for all the sample data, each data will have equal chance of selection. So we're saying that we will determine the range of the data and select sample based on the random table or computer audit software, which is used widely by the big accounting firm. Now, when do we use statistical or non-statistical sampling? So basically, the decision to use statistical or non-statistical is very much depends on the auditor's judgment and as well as the ability of the audit firm. Okay, but the end of the day is that our aim is to get the sufficient appropriate audit evidence to be the basis for our audit opinion. So basically, most of the time when we want to use a statistical sampling, the client's accounting and internal control system are reliable and effective, involve large population, as I mentioned just now. It could be in a hypermarket or organization where so many transactions happen daily. The populations are homogeneous, okay, and the population are identifiable and accessible. Advantage of statistical sampling, we can design efficient sample, we can measure the sufficiency of evidence obtained, permit the auditor to have intensive examination of sample items, we can plan the audit approach in systematic and scientific manner, and most of the time, statistical sampling will be performed with the assistance of CAAT, computerized assisted audit techniques. That means we use certain application to assist us. But the disadvantage would be in getting the software, it could be costly for certain firms. That's why using CAT, as I mentioned earlier, will only be adopted by large firms. As for disadvantage, we need to make sure that our auditors are trained in sampling techniques as opposed to non-statistical sampling, which is based on professional judgment, and we can train our own coach training. So that's it for today. We shall continue with non-statistical sampling video.